whatever.
Got it, great. And then I'm going to spotlight for everyone. Wonderful, super. Jeffrey, I'm Eliza, hello, from Nevada County Arts Council. Thank you so much for accepting our invitation. And at the moment you're in LA, aren't you?
I am.
Wonderful. And then the only other thought I have is how can we make this as loud as possible? I might shut the door here.
I could use my theater voice, you know, just really play to the back of the room, really get deep with it. How's this? Am I enunciating well enough? I'm not sure.
Yes, and I'll turn up the owl as well.
Okay.
And let's see how this works. We'll try that.
Hey, test, audio, 1, 2.
Well, for everyone else's benefit, Jeffrey, I'm going to introduce you. Jeffrey, welcome to the business of art. You are MA, MBA, EA, a tax professional, as well as a writer, actor, and magician, no less. In addition to filming filing over 400 tax returns every year, you serve as an artistic director for Improv Theatre. You teach at the West Side Comedy Theatre and serve on the board of the Ruby LA and the Improv Network. You have taught psychology at Citrus College and given lectures to artists at CalArts, California Lawyers for the Arts, and the city of Santa Clara. And I can't tell you, when we learned about you, we thought we had gone to heaven, because at the moment, Nevada County Arts Council, as Sophia will have told you, is administering a grant program of $3.5 million over 19 counties in Northern California, and we have 80 grantees, and 50 of them are individual artists. And those individual artists are always asking us questions about taxes. And we have been advised that we cannot give advice and speak to your tax professional. So this is a wonderful opportunity for us to hear from you. I also just wanted to introduce who is invisible in this moment, Sophia, who is our amazing grants manager. You can't see her, you might have seen her on the screen before, but she's very much with us. Jeffrey, over to you.
Perfect. Hi, it's really good to be here with you virtually. Taxes can be dry, so I'm going to do my best to make it as not dry as possible. The question that I always get, by the way, is, Jeff, is that a shower behind you? No, it is a voiceover booth. Not great for showering. Microphones do not like water. Yeah, I'm a creative, like I'm assuming many of the people in this room. And so I started off I ran a theater for a bit, and I learned how to, you know, do a 501c3 application, Form 1023. And also I learned to do the accounting myself, and then eventually got an MBA, and I started giving my friends advice. And then at some point, somebody was like, why don't you charge for this? And I was like, wait, I could charge money to do something that I enjoy doing? You see, I've been an artist for a very long time. And then I was like, oh, you can make money doing things that you love. Wow. Then I charged all my friends $20,000 a tax return, and that's why I'm here. Just kidding, I wish. Unfortunately, I cannot be exhaustive when talking about taxes as much as I would love to be. You probably would not enjoy my 10-hour version of this because there is so much to get into. But what I'm hoping to do is provide a general framework of some of the things that come across, so that as you're going through in your day-to-day life, you have kind of the skeleton that you can build the bones and muscles of smart finances atop of. I didn't write that myself, so if you didn't like that metaphor, you know, someone else wrote it for me. AI wrote it, that's why. Let's just talk about like the big fear that people have. People are always worried that they are going to go to jail. I always tell people that does not happen very often. There are many worse things, or I guess jail's pretty bad, but there are other things that you should be more concerned with that are more likely to occur. So let's talk about some of the common myths and misconceptions. At this point, I assume that you need something to freshen you up, so enjoy those rabbits and little chicks to bring some joy to your life while I talk about the things that people tend to misunderstand about taxes. So a lot of people really focus on the refund. That is the goal in the tax return, right? But if you think about the word refund, it is money that you've already paid that's being refunded to you, right? You don't go to Best Buy and say, hey, I'd love $3,000. They'll go, okay, did you buy something worth $3,000? So in most cases, when you're getting a refund, that is money that you've paid towards the IRS or to California or any other government that you're getting back to you. So $12,000 refund. Wow, whoo! But that's $1,000 per month that could have been in your pocket, right? So a lot of people really focus on getting the refund, but really it's not, you probably want to keep that money during the year. And that ties into number two, which is any good tax person can get anyone a refund. Unfortunately, there are a lot of fraudsters in finance. If you watch the news, you probably know that people who handle money sometimes do bad things, right? Anyone who guarantees you a refund without looking at any of your finances, I'm good at my job, but you can't just like say numbers at me and I'll be able to tell you whether or not you have a refund. I need to look at all the numbers. I need to know your dependents. I need to know what expenses you have, and I need them categorized so I can know what things are deductible and what are not. So if somebody's promising you something upfront, then they're probably doing something kind of illegal in order to get you that refund. So be careful, right? And then furthermore, a lot of people think, well, it doesn't matter who I pay to do my taxes because they'll be liable for any mistakes. And then I could just walk away and say, oh, it's the accountant's fault. Sadly, you are liable for anything stated on your tax return because you sign your tax return saying that you've reviewed your tax return and that everything is true under penalty of perjury. So if you made $1 million last year, I hope that all of you one day can have that problem, but your tax return says that you only made $10,000, then you might be curious as to why your tax return says that. Anyone logically could assume that something might be wrong. So the IRS is going to assume that even if you are the person who just signs and doesn't look at anything and just assumes that it's fine, that you should have known better. So that's why I always caution people, be careful of who you let manage your money, right? The other thing, I don't make enough money to be audited. This is actually changing because the IRS has finally gotten more funding. And so now they're going after people who are making more than $400,000 instead of going after people who are making less than $40,000. But when you make less money, you are easier to audit because your tax returns are less complicated, right? And also the thing is the IRS is going to assume that you have less money to pay someone to defend you in an audit, right? So this happened to a client of mine where they're like, oh, I guess we're going to have to go to tax court. And I told them, okay, we're going to have to go to tax court then. They thought that I wasn't going to be able to defend my client, but we ended up settling because they realized that I wasn't going to let them, like it was I don't want to get into the whole mess of it, but they're going to assume that you aren't going to want to defend things. So make sure that you have a professional that is helping you with these things just in case they try to be bullies, right? Don't try to avoid audit red flags. Like if you spent $10,000 on something, don't not claim it just because it might cause a red flag, right? If you have 5 kids and you're like, oh, it might be a red flag, because what if they don't think I have those kids? You have those kids, right? If you spend $10,000 on your art, if you had a bad year and you operated at a loss, if you actually incurred those expenses, claim them. Don't let the IRS and your fear around them prevent you from getting the deductions that you're entitled to. Number 6, I hate this. This is partially because of TikTok and YouTube and Instagram. An LLC will automatically save you a bunch in taxes and allow you to, deduct your home, and your children are now your employees and blah, blah, blah. No. tax planning is relatively complicated, or at least that's what I say to, make myself feel good about the amount of time that I've spent setting taxes. So, just somebody just saying, oh yeah, you have to have an LLC without sitting down with you and looking to see if it makes sense, especially in California, which has an $800 a year minimum tax. Make sure that you aren't just rushing into something without really looking to see if it's right for you. And then finally, last myth, you can file unlimited extensions without paying. An extension that you file is an extension to file your tax return, not to pay your taxes. So I know what you're thinking, right? Well, how do I know how much I owe, or if I blah, 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 if I haven't prepared my taxes, right? What you're supposed to do is prepare most of it. And then, oh, I'm waiting for like a W-2 that hasn't come in, or there is that document that like needs to be fixed, or that kind of thing. I still need a few more depreciation, whatever, right? So I just need a few more months to figure out my returns, right? So that's what an extension is for, not it's April 15th and I haven't done anything. So let me get an extension. So that extension, you still need to estimate what you owe. And also, once you file that one extension, you cannot keep on extending for forever. And anything that you haven't paid, interest and penalties will accrue. So extensions are helpful. I had to file a few in the past week, just because it was a crazy year. First year that the deadline is just April 15th. It wasn't that since 2019, so more taxes, less time, but I'm still planning on getting the ones that I extended done within the next couple of weeks, because we don't want those things continuing. So you're not going to jail, probably. It's very hard to go to jail for taxes. You really have to be like, yeah, I made $10,000, but I didn't claim any of it, right? By 10,000, I meant like 10 million, right? You don't go to jail for getting a W-2, for like misspelling the name of one of your dependents, or anything that we worry about. Those things are minor. You make a mistake, the IRS is like, hey, we think you made a mistake. And you're like, yeah, I did. And then they're like, you owe us $100, like, okay, and then it's done, right? That's how most audits close. They're not really a thing to be afraid of. But when it comes to tax delinquency, just because you're not going to jail doesn't mean you might not run into other problems. So one, you owe taxes for a long time, penalties and interests will accrue, right? They'll send you a bill, they say this much in penalties, this much in interest. If you don't take care of it, it will continue to accrue. What sometimes happens is people get like the letter and it's stressful, and they have 3 letters and it's really stressful. Then they get a 4th or 5th letter and then it's really stressful. That 4th or 5th letter you do not want to ignore, because those are notices of liens or levies, right? Liens, not as scary, but mess with your credit score. They just basically tell other creditors, hey, this person owes us money, so don't give them credit. Levies are the annoying thing where they're like, hey, you owe us $3,000, and we've told you a couple times, oops, well, you have $3,000 in your bank account, so we'll just take it. Okay, bye, right? You don't want that surprise. And there are steps that you can take to prevent that from happening. But when you get things from the IRS, I know it's scary, but you have to open it, see what it is. If you have a tax person that you trust, send it to them, let them review it, right? Other things, if you are delinquent in your taxes, your mortgage underwriters are going to need to see those before they allow you to purchase your home. And you could miss out on potential refunds or potential stimulus checks. I'm not sure if you remember the good old days of COVID decades ago. But there were, I think, 3 different California stimulus checks, each for around $600. And the way you claimed it is just by having, I think it was the 2021 tax return. If you filed that one on time, then you got 3 different stimulus checks. If you filed it a day late, you got nothing. So that's, for some people, $1,800. If you had dependents, even more, that you would have missed out on if you didn't file your tax return on time, right? So don't let the money sit on the table. Get that money. That's your money, right? And I know I just said anytime you get a letter, like open it up, respond as quickly as possible, but also be careful, because there are bad accountants, but there are also scam artists. And we don't have to do like a raise of hand if we know someone or we've fallen for something like this, right? I literally just finally renewed my car's extended warranty. But you get these letters, and if you look at these, they look pretty like realistic, right? Oh, it's got the IRS logo. It says Internal Revenue Service. It has your name, dear taxpayer. But you look closer, and at the bottom you'll see, oh, Office of Disaster Assistance, U.S. Small Business Administration. Those are two different organizations, right? So this is why it's helpful to have somebody on your team who knows these things, because I tell all my clients, you receive any letter, send it to me. I'll be able to tell you at a glance whether or not it's legitimate, right? So I know I just said, respond to things as quickly as possible. Don't let them fester, but also be careful, right? Take a second. If somebody's calling you, if somebody's emailing you, if they say you're going to go to jail if you don't pay your taxes, the IRS, anyone you talk to at the IRS is probably going to have like a Southern accent for some reason and sound like kind of bored with their job. So if they sound like angry, that's not them. They're tired because you're like their 70th call this morning, right? So be careful of scammers. Now, let's get to the fun stuff. Artists, not always known for being the most organized people. My room seems nice and organized. I have this sound booth, I have this drum kit, right? What an organized guy. You cannot see my desk. There are papers. There's a ketchup packet from when I was like eating before a meeting the other day. So we're not always the most organized, but there are things that you can do. You don't have to be perfect, but there are little steps that you can take in order to ensure that if anything happens, if anyone ever questions your expenses, which is essentially what an audit is, you have records, right? So you don't have to print every email that you get with every invoice. The easy thing to do is just keep a folder if you get something via email, right? A lot of people aren't paying cash anymore, so a big old pile of receipts isn't happening as much as it used to. Now, the things that you can do that make your life a little bit easier, maybe have a separate card or bank account for your business, right? I know some people like to maximize their points, but like whatever point thing you want, make that card be the business thing. So anytime an expense goes through that card, you know that it's a business expense. So if you have 5 different accounts, you're not trying to sort through and go, I went to McDonald's that one day. Was it a business thing or was it not, right? Another thing that will help is calendar entries, right? A simple thing, anytime you have a meeting, make sure that you put it in your calendar. Anytime you're driving somewhere, make sure you put it in your calendar, because at the end of the day, you don't need everything to prove an expense, but you just need enough to show beyond a reasonable doubt, or not beyond a reasonable doubt, that's a murder trial, but sometimes taxes feels like murder. Am I right? But more likely than not that the expense occurred, right? So calendar entries, if you're driving a lot, making sure that you're keeping contemporaneous mileage logs, right? So that you can show that that driving actually happened. That's one of the big things that throws people off. The IRS doesn't want you at the end of the year going, how much mileage did I drive? Because they know that that number is going to be wrong, right? And they have the right to disallow that because you can't estimate the miles that you drove. You need a contemporaneous mileage log. So if you have not heard of this miraculous app, I'm not paid by them, I should be, called Mile IQ. You have your phone, you bring it with you all the time. Every time you're driving, it's like dating, swipe left if it's personal, swipe right if it's business, right? It automatically logs everything, and it makes things so much easier because it's contemporaneous, right? So even if you're organizing it at the end of the month, it is contemporaneous because it was recorded the time that it happened, right? You just want to be have enough records so that anything that you say isn't self-serving, right? So if I have $3,000 in meal expenses and I say, "Hey IRS, yeah, I definitely, those were all business meals, right?" Well, that's self-serving because obviously I want to take the deduction. But if I have it in my calendar that I have those business meetings, if I have my emails that show that we schedule those business meetings, if I have notes from those business meetings, they're probably not going to get that deep, but knowing that you have it and being able to say, "Yeah, what do you want me to send? You want me to send you the emails where I schedule those meetings? You want me to send the calendar events? Like, what do you want?" is going to give you the edge up so that anytime you get audited, you're not worried because you know that it exists somewhere, right? So what is taxable income? The easy thing to say is basically all of it, with some exceptions, right? Any way you get paid, if it's through Stripe, if it's through, like under the table, like literally somebody handing you money under the table. If somebody's like, "I'm not gonna pay you, but like I can pay you in like illegal drugs," right? However you get paid, it is taxable income. Even if you're doing something illegal, that's how they got that one guy who they couldn't get him for being a crime boss, but they're like, "I didn't pay your taxes," going to jail. So in general, any income that you're receiving, unless it's a gift, is going to be taxable. So that does mean that most grants that you receive are considered taxable income. You have to look through a series of steps. So, for example, sometimes grants paid by a charitable foundation for a specific purpose. So, for example, educational grants, if they're paid to you for tuition, those are the types of grants that usually aren't taxable. But in pursuit of art, usually those are considered taxable income. But those can be offset by your expenses. That's the big question that I get a lot, where it's like, "Hey, I made $10,000, but I paid $8,000 for all these contractors and all these supplies. Am I going to be taxed on the whole amount?" No, because the IRS allows you to deduct things against your income for business purposes. I really like the phrasing and the law. They say specifically, deductions are a matter of legislative grace. So we don't have to give you these deductions, but because we are so kind and loving, and because your taxes pay our salaries, we are allowing you to deduct these things. Incredibly kind. Thanks, government. The thing to remember is ordinary and necessary, right? So for your business, for what you do, are the expenses that are incurred ordinary to your profession and necessary for doing the job, right? So for example, I'm an accountant. We're all alcoholics. That's how we get through the tax season. So it's normal for me to have several bottles of whiskey just lined up. And I take a shot, do a return, take a shot, do a return, right? That's an ordinary expense. Now, I might argue that it's necessary, but the IRS would say, "No, it's not necessary. You could do it sober, you just wouldn't like it," right? Now, a necessary expense is a website, or a necessary expense would be like my tax software. I did at one point early in my career do everything by paper, and I almost died. Those things are helpful and appropriate, and they help you get the job done. So in general, if you're wondering, is this deductible? It probably is, if it is something that ordinarily is purchased and is helpful for doing the job. Now, you want to be careful about trying to disguise personal expenses as business expenses. For example, well, I need to eat in order to do my job, otherwise I die, right? You're correct. You would die if you did not eat. But that's a personal expense, not a business expense. It's a personal expense that allows you to do your job. And I get it. I'm planning a wedding right now. And for the past year, I've been thinking, even before I propose, is there a way for me to deduct this as a business expense? There has to be a way. Okay, so I'm not going to invite my friends and family, only business contacts, right? Nope. Nope, 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 nope. You can't try to sneak it past the IRS. I promise, if you've thought of it, someone has tried it and there's probably a court case about it. Just to give an overview of what normally is considered ordinary and necessary, I have some examples, right? We won't get deep into these, but here are some things to whet your appetite. And if you want me to give more details at the end, I'll answer some questions and that'll be great. So things like advertising, right? You're casting your listing pages, your websites, your business cards, if you're paying out commissions, bank fees. This includes if you're receiving payments through like Stripe or a credit card app, any of those payment processing fees, contractors that you pay out, right? That reduces your taxable income. Make sure if you pay someone over $600 during the year, you get a W-9 from them, so you can send them a 1099 at the beginning of next year. Any equipment purchased, so this could be a computer, this could be one of those big old printers for printing art, things like that, right? In art, we don't tend to see like huge equipment purchases. We're not buying huge factories filled with things, but those occasional purchases, tablets, phones in some cases, deductible. Insurance, not health or car insurance, but like production insurance, liability insurance, errors and omissions, those types of things are deductible. Health and car insurance have their own weird rules for deducting on your business tax returns. Legal and professional fees, not tax prep, because that is personal. Unless you have a business tax return, then it's deductible for the business. Office expenses, supplies, softwares, pens, pencils, cute Hello Kitty stuffed animals that make you get through the day. Just kidding, not deductible. Luckily, I didn't buy it. It was a gift. Shipping and postage, rent and lease. So if you rent out a studio or place for rehearsal, those types of things are deductible. Repairs or maintenance for business equipment, parking, supplies, props, costumes, right? Costumes we'll talk about, because sometimes my clients will be like, I had to buy a suit so I look good at this meeting. I'm like, personal, even though it's business related, right? And then local business taxes and licenses or LLC taxes. Travel expenses. So yes, we can travel, we can enjoy the world around us, but you need to substantiate, right? You need to show that there is a business purpose for the travel, and you need to make sure you have good records. Business meals, not just any meals. People do misunderstand this. So if I'm working and I order food, not deductible. If I have a business meeting with somebody and I order food, deductible, right? If I am, filming a thing and I buy crafted for everyone, deductible. If I decide to throw a party and I just happen to get married and I spend, about $70 per person on food, that's my wedding, not deductible. I tried it. I tried so hard. A percentage of your cell phone. You can, if you use your cell phone a lot for work, you can deduct a portion of the cell phone bill. Research, be careful, because as artists, we get to do some pretty fun things and consider them part of our work, right? The other day, I pitched something to one of my development executive friends, and then he was like, this seems like a lot like Boss Baby, right? And I was like, oh, you're right. And then he's like, can you differentiate it? So I have to watch Boss Baby, right? I'm not watching Boss Baby just because I love Boss Baby. This is business related watching. I'm not just like hanging out with the fiance and it's date night. It's work, I'm taking notes, right? That kind of thing is deductible. But fiance date night, watching movies, not deductible, right? So sometimes we get to do things that are entertaining as a part of our jobs. We need to make sure that there's a clear business relationship. Just watching, Love Island season 6, just because you're like, it might inspire me, not deductible, but it could be inspiring and maybe you'll find love too. So classes and workshops, dues, gifts, all those things. Gifts are weird. You can only deduct 25% per person per year, but we all know that if you're a real friend, you give gifts of $200 cash, right? And hopefully by the end of the day, we're friends. I'm going to drop my Venmo in the chat. There are some weird things that you'll run into. I don't want to bog you down with all the details, but car expenses, you need to have a mileage log. Even if know exactly how much you use your business, you need to show the miles driven, because that is just a requirement from the IRS. They need to have that mileage log. You need to prove that there was only business use of the vehicle, or you need to prove the business use percentage of the vehicle, right? So at the end of the day, maybe the easiest thing to do is just keep track of the business miles, and you can take what's called the standard mileage rate. So let's say you drove for 10,000 miles. For every mile, that's 67 cents in 2024. So you drive 10,000 miles, you get an automatic $6,700 deduction, right? Well, easy math. But you need to keep track of those miles, because the IRS is going to assume, if you say 10,000 miles, that you made it up, right? Home office expense, a little similar. This is usually, the typical example is you have a 2-bedroom, because you're rich, you just have a bedroom that you're not renting out or using. So you're like, let me turn it into an office, right? Or you have a part of your home that's used exclusively as like a studio. So if you have them exclusively used, exclusive is the key thing, you take the square footage of that, and then divide that by the total square footage of your entire property, and that percentage of your rent, utilities, renter's insurance, etc., can be a deduction on your taxes. This is mostly for my actors and models and influencers, but also, maybe there are some of you who are like, hey, yeah, I'm a writer, but I do need a nose job. Just first of all, you're beautiful the way you are. Secondly, the IRS won't allow you to deduct that, right? General upkeep, looking good, like getting a little thing there, a little thing there, just even though the industry can be incredibly toxic, not deductible. The IRS would argue that it is personal. If you want to hear about some hilarious court cases involving cosmetic surgery, let me know. I'll save that for the end. Gym expenses. So I know, I'm super big and buff, so you assume that I'm deducting all of my gym expenses on my taxes. It's personal. Business clothes, in order to deduct clothing, like, this shirt, this is one of my audition shirts, because it pops, right? I can't deduct it even if I only use it for business, because the IRS would argue that it could be used for personal, right? Now, if I had a giant inflatable T-Rex costume, or a clown costume or anything like that, a Jane Austen period dress, that type of thing, those would be deductible as a like costume expense. And then fines and penalties, just because you got a ticket speeding towards a business meeting doesn't mean that it's deductible on your taxes. Drive safely, everyone. Okay, so the quick things that I run into pretty often, I get a lot of questions about estimated tax payments, which are sometimes called quarterly taxes. The rule is, if you think you're going to owe when you file your taxes next year, you pay estimated taxes in, I believe, April, June, September, and January, so technically not quarterly, and that goes towards what you would owe at the end of the year, right? So if I'm going to owe $1,000, I would pay basically $250 each time, and then that totals $1,000. Now I don't owe any taxes at the end of the year. The thing that is hard for this industry is our income is incredibly inconsistent, right? Strikes happen, COVID happens, and even then it's very wishy-washy, who knows, right? By April, you might have made $150,000, and that's the only money that you make all year, right? I have clients who will work for a week and be unemployed the rest of the year. So if you're trying to make estimated tax payments based off of inconsistent income, what can sometimes happen is you will overpay, and then you'll have to wait until you file your taxes to get that overpayment back. So I'm legally required to tell you that you need to make estimated tax payments. But I have heard that some people don't do that, and then they just put the money in a savings account and they pay their taxes at the end of the year. I'm not telling you to do that, by the way. I'm just telling you some people do that. I'm telling you that you are required to pay estimated taxes, but I've heard that some people just for safety and financial management don't. It's up to you, but follow the law. The other thing is installment agreements and offers in compromise. So when you find out that you owe taxes, you don't have to pay immediately. That's usually the big shock. It's like, oh, $2,000. Do I need to pay today? No. If you can't pay it by the deadline, then you can do what's called an installment agreement. An installment agreement is just a payment plan. Interest accrues, but it's better than putting it on a credit card where the interest would be like 700% a month. The other thing that you may have heard of is an offer in compromise, which is basically I owed $50,000, but I told them that I was only going to pay $5, and they took it, right? That kind of thing does happen, but it doesn't happen as often as you would like, and you have to fill out a lot of paperwork to get them to accept an offer in compromise. And you really need to show that it would be impossible for you to pay the entire tax bill over the next 10 years. So as you might imagine, if you owe $1,000, they're not going to settle for $6, right? They'll just be like, yeah, just pay it over the next 10 years and just pay us a crap ton of interest, right? So they can help, but for most people, installment agreement is going to be the way to go. Don't trust TikTok. People on the internet sometimes aren't your friends. I feel like a cool dad. Don't trust those people on the top ticks, right? But people who are giving financial advice professionally usually try to give it in a very nuanced, specific way, right? I'm giving very general things. I'm not being prescriptive in what I'm saying. I'm not telling you what to do, right? I'm just like, here's some information. With TikTok, Instagram, YouTube, etc., it's very much, you're going to lose out on $7,000 if you don't take care of this tax hack right now. Watch until the end of the video so I can get money off of views, right? That type of thing, that person, once you've viewed their content, they're done with you. They have no other debt or fiduciary duty to you. So just be careful, right? Try not to do something just because it seemed cool on the internet. Sometimes I like every year somebody is like, hey, is this thing true? And then I'd like write a paragraph explaining why it's not true, why there's not a new law saying that you can deduct your dogs on your taxes as a business expense. W-2 versus 1099 is another thing I get a lot of questions about. W-2 means you're an employee of a company. 1099 means that you're a contractor, you're a business. Even if you don't think you're a business, you are. And you are basically in control of your finances and your rate and all that kind of stuff, right? W-2, you cannot deduct expenses related to that income. 1099, you can, right? It can get confusing for some artists because they get both and then they're like, how do I organize my expenses? The answer is carefully. And then S Corps and LLCs, the big thing is just making sure that if you do this, S Corps can be very expensive. Separate corporate tax return, minimum $800 tax, you have to run payroll, you should hire an accountant to make sure that you're keeping track of all the S Corp related things. And again, if anyone wants me to go deep into that, I will. But you want to make sure that it's right for your business. And even I have clients who are making like 6 figures and they're like, I don't want to deal with the hassle of having an S Corp, even if it saves me money in taxes. And I'm like, great, you don't have to, right? You don't need to do things that are going to save you taxes if it's going to be a hassle for you. In the same way, you don't need to do anything really that you don't want to do because we're adults, right? Peer pressure is so high school. Just do your best. If you take away nothing, take away the fact that this stuff is really complicated, and I spend way too much. Like last year, I think my like continuing education hours, you're supposed to do like 24 a year. I think I did like 75, and then I did like a whole bunch of reading on top of that that wasn't like a formal class. Um, and I don't know everything. You asked me about estates. I don't know what the heck to do about them. Almost swore. Wasn't sure if I could swear in that moment. They should have asked before I signed up. It was like, how many F-bombs can I do? 3? Great. I'll save them all to the end. Just as everybody's walking away. But you know, just do your best. Every time you make a mistake or misunderstand something, just reorganize things so you do better next year, right? Some takeaways: you're not going to jail. Be careful of scammers and TikTok. Find someone who you trust that can help you with these things, even if they're not, you know, somebody who you're meeting with like every year, even if it's occasional. Just make sure you're talking to someone who can occasionally like push you in the right direction. Be as organized as possible. It's not going to be perfect, or maybe it will be, but just keep everything accessible. Try to know the rules and abide by them to the best possible degree. And if something seems too good to be true, it likely is. Except for me, I'm perfect. I'm just this smart and handsome all the time. That's the one exception to the rule. And with that, let me drop some F-bombs or answer any questions that you may have.
Thank you so much, Jeffrey. I know that Sophia, our grants manager, has a very specific question to ask you. And especially because we have a couple of our grantees zooming in to this call today. So Sophia, over to you.
Yes. Hi, Jeffrey. Thank you so much. You had me cracking up, even without the F-bombs. So thank you. You made taxes riveting. So the question I want to pose is really kind of on behalf of our individual artist grantees, which, as Eliza mentioned, there's 50 of them through the upstate region. And I know for a lot of them, it's their first time receiving a grant. And so they're like, you know, is this income taxable income? Which I know you started to address on one of your slides back then. But a follow-up question I have as well, maybe if you could like touch on that again, but a follow-up question, you started to talk about like, well, you know, let's say I received $20,000, but I'm working on an album and I'm paying my bassist like $2,000 and I'm paying my guitar player $3,000. So like, sure, it says Sophia got $20,000, but I've, you know, kind of like funneled, let's say $17,000 of that. Like, how do I go about showing the IRS that? What do I need to do? Do I need to be a business? Am I okay just being an individual? If you could kind of like elaborate on that scenario.
Yeah, so yeah, more than likely and I'd say the cases in which grant income isn't considered taxable would be relatively rare. But the nice thing is you are having substantial expenses to offset that. And also you're getting paid to do art. So it's kind of cool. I always have clients who like make like really high six figures and they're like, I'm paying $30,000 in taxes. Ooh. And I'm like, yeah, but like just your tax bill is what some people make in a year. So like, I know it seems scary, but you still have, you know, a lot left over. So I know we hate paying taxes, but if it is of any consolation, it is cool to get paid and like for somebody to believe in your art. How you account for that? All tax software has a different format, but at the end of the day, it's putting things in the same place. So the main tax form is called a Form 1040, and there's an additional form called a Schedule C. And the Schedule C is where you report your business income and your business expenses, and it shows your business profit or loss. right? There's a line for your total income, which would include money from grants or other sources. And this is just, 1099 cash, not your W-2 stuff or any other, interest or dividends or anything like that. And then you'll have categories for all the different expenses. Basically, the categories that I showed you before, and then any other random things. So you're not assuming you make $10,000, right? You're not being taxed on that 10,000. If you spend $8,000, then what's going to end up happening is you're going to be taxed on 2,000, which isn't so bad. If you spend more than that, then you could even operate at a loss. So you spend $12,000. So now you have a $2,000 deduction against the rest of your income. So, a lot of artists that I know will operate at a loss. So even if you're, like, oh, I don't want to deal with it, you'll actually usually see that once you put your own money in, that you're actually saving more on taxes by reporting everything properly. But yeah, I think I answered all the little ones, but yeah.
Yeah, and just a clarifying question. You talked about filing or deducting business expenses.
Mm-hmm.
You do not need to be an LLC to do that. Is that correct?
Correct. And thank you for asking that question, because I hear that all the time. A lot of people think that LLC corporation means that you are a business. If I right now go to the corner, I'm going to sell lemonade. It seemed like I was doing something else, but I'm like going to the corner, not selling drugs, selling lemonade, and I make $5, right? I haven't gotten a DBA, I haven't done anything, but that is a business activity. As soon as you start doing an activity with the intent of making profit, you are a business, regardless of your licenses, your trademarks, everything like that. So you have to do very little for the IRS to want your taxes.
So essentially, all of our individual artists already can automatically deduct business expenses without having LLC status.
Correct.
Wonderful. I see Lisa put a question in the chat and is raising her Zoom hand. I don't know, Lisa, if you want to unmute.
My Zoom hand is asking a question. One is regarding saving paper receipts. What is the story with that? Because they all fade because they're on that thermal paper now.
Yeah, there was a really funny story about somebody keeping their receipts. I can't remember where, but they weren't paying attention and everything disappeared, and there were all their records. I would say scanning things is great because it lives on a cloud somewhere forever. And it's much easier to organize and label and search. And I still do have some paper records for some things, but there was a time when I had to keep paper files for all my tax clients, and it was too much. But now that everything is digital, I'm saving space. So to protect things from fading, I would say scan, keep it somewhere, save some space, and it lasts forever.
I guess my question is what you really need those still, even if you can go back to your bank records and show on the bank that you've spent the money on those things?
That's a great question. It depends on the expense. So let's say it were something like Adobe Creative Cloud, right? That's a business expense. Or if you're a musician and you bought a violin, right? Very clearly a business expense. Now, if you're a person who buys supplies from Target and you have a bunch of Target expenses and you don't have a separate account, then the IRS might go, well, there's no way of proving that these expenses were business related. So in cases like that, where it might be, you want to have the receipts. Also for hotels, if your food bill is on the hotel, you'd want the itemized receipt, just because the IRS might go, some of this was probably food. So in most cases, if you're being audited, it's not going to get that deep. Most people will never deal with a type of audit where they're going that deep with your receipts. But, and I just dealt with one of these where the IRS send all the receipts, and a lot of the receipts were Lyft transactions, and you want us to print this out and send you like 150 different Lyft rides? And I had to fight them on that because it was ridiculous. But it's one of those things where it's good to have if you need it. You don't need to necessarily worry if you don't. But my argument is like, try to keep the best records that you can, to the degree that it's not super tedious. It's
Okay.
yeah, sorry.
I did have a second one, if it's okay for me to ask, and that's, I mean, I represent a nonprofit, and so we pay a lot of contractors who are artists. And there's the whole thing about the $600. So let's say a contractor makes just $150.
Mhm.
Do we need to still give them a 1099 at the end of the year?
No, so when you receive money, you report it regardless of whether or not you got a 1099. The requirement for sending a 1099 is when you've paid them more than 600. You can, if you want to. Some accounting systems just make it easier to give it to everyone as opposed to picking and choosing. But if it's tedious and you have 100 people and you're just like, do we want to deal with the paperwork? You're not required unless you've paid them 600 or more.
And then as an artist, am I required to, if it's under 600, to, and I'm a 1099, am I required to report that?
Yes, regardless of how it's reported to you. Some people are like, oh, I got paid cash, I don't have to report it. Cash, check, Venmo, crypto, regardless of a trade for services, any way that somebody may try to justify not reporting it as income is not valid. So I hate giving that because people hate me when I say it, but don't shoot the messenger. I'm just me. But yes, all income that you receive for your services has to be reported as income.
Wonderful.
Liza?
Yes, there are a couple of questions in the room. I'm so sorry. Because we literally only have about a couple of minutes because our next session is starting. Sorry, Lisa. We'll come back to you if we have. Yes, please.
Yeah,
No
so
problem, thank you.
if you claim a legitimate loss several years in a row, does that become an audit risk?
That's one of my favorite questions, and because we're short on time, I will be brief. You may notice that that's a hard time for me. So you have 5 years is a 5-year look back period, right? So you may have heard the rule: if you have a loss 3 out of 5 years, you all of your losses are disallowed, right, or something like that, or they'll audit you. You can have a loss as many years as possible if you are considered a legitimate business, right? Me, an accountant, having a loss for 5 years, I'm bad at my job and I'm not a real business, right? Because I should, as somebody who manages money, I should be able to make money. I should have the knowledge needed to make a business profitable. Now, in art, because it is so difficult and so inconsistent, you could make 6 figures 1 year and then not make anything at all the next year, regardless of how good you are at your job. So there's an understanding that you can still be, so it depends on the type of business, but I have worked with clients who have had really substantial losses for multiple years and occasional bits of profit. And so far, the IRS has not had a question about it. If they question you, you just need to prove that you are a business, not a hobby, which just means I have the training to do this. I'm trying to improve my practices. I'm putting substantial effort into my work. I, am making changes year over year, etc. But those types of audits are incredibly rare. But if you're being an artist, which if you're here, that counts as one of the things that would prove that you're trying to make a profit, you'll be fine.
Yes.
Can I ask for clarification? I think you said that donations are not taxable, but I wasn't sure I heard him correctly.
I think we were talking about grants, weren't we? Not donations.
Yeah, but you use the word donation.
Okay.
So yeah, it in some cases, grants from charitable companies can not be considered taxable, but all gifts are not taxable. they're also not a write-off from the person. So let's just say a friend of yours is like, hey, I love your art, I want to support, here's $2,000, you don't have to give me anything in return, right? Not taxable. You can, you just enjoy that free money. Now, if your friend is like, hey, I would really love a painting from you, here's $2,000, do whatever, and you'd usually charge $300 for it, you would still consider that 2,000 income fully, because even though they're being very kind and, you know, tipping pretty generously, it's income. But just general gifts from people would be donations. If somebody's like doing like a Kickstarter, that's kind of tough because it really depends on how things are set up. It could be considered business income, it could be considered donations. It really depends on if they're getting something in response in return for their donation.
Can I pay you for an answer offline?
I think
Sure.
yes, Jeff.
Oh, sorry, go ahead.
Say, you're kind, aren't you, Jeffrey?
Yes, but please after April 15th. Because if you want to do a phone call, like I know I seem like I like had to like do a lot to my face, like look like I'm not like exhausted. Hair is hiding crow's feet and wrinkles and bags under my eyes. Yeah. But if you have additional questions, feel free to reach out. And also sometimes if it's a quick thing, I won't even bother charging because it takes more time to send me a voice. Yeah.
Did you have a quick one?
I don't know if it's quick, but could you give one or two reasons why somebody might want an LLC, given that California charges $800 for the privilege of having one?
Did you hear that, Jeffrey?
Yes. So an LLC for tax purposes does nothing. The purpose of an LLC is asset protection. And so not a lawyer, not legal advice, but what a lawyer may say, I'm not a lawyer, not giving you legal advice, is that let's say you are in a high risk industry like construction, or you're forming a restaurant, right? Where somebody can slip and fall or get food poisoning. You want a legal shelter for the rest of your assets, right? So if you have a lot of personal assets, or you're just worried about like a lawsuit, I would form the LLC to give you some extra legal protection. The S Corp is really where you start getting into like the tax planning where it's starting to save you money, but you're spending so much for the S Corp, it takes a while for you to have the profit necessary to outweigh the expenses, right? So real quick, imagine you're spending $3,000 for taxes, accounting, and the California tax. You want to make sure your tax savings exceed $3,000 to make it worth it. For most people, that's when you have a profit of around $90,000, but it depends on how you run your business.
Wonderful.
Thank you.
Thank you so much.
Thank you. You're all great.
Wasn't it?
You.
Seriously amazing. Plus you got a few laughs, which it's quite late in the afternoon, and I'm just about to sort of bully everyone into submission to join us for one of our penultimate session in the auditorium. So thank you so much. You've been amazing. Thank you.
Thank you. You all have a wonderful rest of your day.
Tax,
I
thank
know,
you.
relax.
Yeah.
Relax at tax.
That's just funny off the bat.
So-
When are we gonna hold